My name is Melissa with AG Real Estate. I have the pleasure of interviewing Tiffany Cross with Dedicated Credit Repair. So thank you so much, Tiffany, for being a part of this video so that we can share a bit of information with everyone.
Absolutely. Thanks for having me.
I wanted to start off with a few questions. But before I do you want to share a little bit about what you do with Dedicated Credit Repair so that people have an idea of everything that you do, and then we'll dive into the questions.
Sure, absolutely. So I'm the CEO of Dedicated Credit Repair, and we've been in business now. This is our 15th year, right here in Temecula, Murrieta. We are not a franchise. We're truly just a homegrown company that's just worked. We've helped thousands of clients over the last 15 years repair their credit. And essentially, people often can misconfuse or just misunderstand what credit repair is versus like debt consolidation. And we're really truly just credit repair, which is the removal of negative items off of credit reports for the sole purpose of bringing FICO scores up to get people qualified to purchase homes or cars and things like that. So we're really more of the plastic surgery after the financial hardship, whereas like debt consolidation and things like that are more in the middle of trying to stop the financial bleeding, so to speak. So that's kind of the difference between what we do. But we are registered with the Department of Justice, and only 3% of all credit repair companies nationwide actually have that. And it's important to kind of mention because there are some companies out there that don't operate legally and ethically. And so we just strive to, of course, continue our reputation and help lots of clients.
Thank you for sharing that. I think it's definitely good information for all of us to have. Oftentimes, most people do tend to go with debt consolidation as opposed to credit repair, just because unfortunately oftentimes we're not aware of what the difference is and what all of that entails. So thank you so much for sharing that.
Sure.
So I know a lot of questions right now that we're getting asked are around COVID-19, how our consumers are getting affected with their credit, what impacts they have. So the first question, which is probably a very, very popular one that we are getting right now, is how will any mortgage deferred payments impact the consumer credit rating at this time? Whether it be forbearance or deferring their payment, how can our consumers actually see impacting overall in their credit?
So unfortunately, there's a lot of misinformation out there. I was just actually on a live webinar. I want to say it was last week. And there's even someone, from NAR on there speaking about credit and saying it's going to be fine the next 90 days. Anybody in deferment going to have no effect on their credit, which was scary because not only is that not real or not true, it's providing people with a false sense of security. And so I just wanted to mention that right now what we're seeing is that the CARES Act is supposed to protect consumers from getting 30-day lates placed on their credit. So from that standpoint, that is correct. What people don't realize though is that when you don't make a payment on something, if you've had your house payment for 3 years, for example, and you've made every 30 days you make a payment, when you stop making a payment, even though they're not going to put a 30-day late on your credit, you're going to lose points because you're going to lack history. You're basically stopping a payment pattern. So you're going to lose FICO score points from that. But then more important than even the temporary FICO score decrease, we're seeing the words mortgage deferment. We're seeing the words forbearance actually appear on a credit report. Sometimes when the consumer's just calling to inquire about what types of programs are available. And sometimes they don't even actually agree to go into a forbearance. But the person on the other end of the phone will put forbearance on their credit profile, and just the words forbearance or the word deferment. We've even seen it report as natural disaster. Those things can actually cause a mortgage underwriter to kick out a file and say, no, we can't move forward on this refinance, or this consumer cannot purchase because the words themselves. So it's not just about a FICO score decrease, although we are seeing that happen. There's just lots of different what if, different scenarios that could happen. So at the end of the day, like we've always said, and I think people are, are kind of learning a little bit more, the forbearance is an option for people that really, really need it. And goodness gracious, there's a lot of people that need it. And of course, we want to make those programs available. But if you do not need to go into forbearance, it is literally the worst thing you can do right now to your FICO scores, and also, frankly, your ability to repurchase. So we're just telling people, if you don't need it, don't use it. Don't even call and inquire about it, or you're going to have to face the music.
Now, you say that because it lacks the payment history, does it basically, even though it doesn't report as a 30-day late, how does that impact in the long run? Is it always just going to look at as a late payment per se? Is it something that, is there a certain time frame where it does stay on your record? Does it ever come off?
So essentially the word forbearance will stay there forever. I mean, it'll stay there because the credit bureaus are under the impression that the words, or they're saying it doesn't hurt your score. But they're not taking into the account that the lack of payments actually, so it's not just the 30-day late, it's the lack of payment history that's not going to be reported. That could potentially drop the scores. So, but the words themselves will stay unless you get them removed. And so that's something that, of course, we specialize in. And I like to provide this information without coming across as salesy, because I feel like the information just needs to be given to people in general. But obviously that is something we would help clients do, is get the words forbearance or loan deferment removed. And of course, any 30-day lates that were illegally placed on your credit report during that time. But the other concern, of course, is that depending on who your loan is with will determine what is available to you. So just because your neighbor may have Bank of America and you have Bank of America does not mean that the same things are going to apply. So they may be offered to put the payments or the 90 days of deferred payments on the back end of the loan. You might be told no. You might be told that it's going to be due in full on the 4th month. So it's super important not to assume anything just because you Google Bank of America and someone else has it. And then just be alert to the fact that there is a good chance that you'll owe the entire amount in the 4th month.
Okay.
Yeah.
Definitely great information. So thank you for that. The next question is, I know most people obviously have either lost their job or unfortunately can't keep up with a lot of the payments right now. What is the difference between having a late mortgage payment as opposed to a late credit card payment with their FICO score? How does that impact, and how are the two different?
So when families are sitting down and they're making those tough decisions on, listen, we don't have any income coming in, or we have less coming in. Something's got to give. What do we miss? Right. And unfortunately, sometimes consumers are under the impression that, well, let's just not pay, the Macy's card. Let's leave the Old Navy card alone this month, and things like that. And they're going to think that it's going to, affect the score less, and it doesn't. So the FICO score does not make doesn't have any discernment between the two. So if you have one 30-day late, typically speaking, we see a 60 to 80 point decrease within 30 days of it reporting, no matter what it is. So there is no differentiation between what you're late on as far as what the FICO score is going to do. That being said, again, if your goal is to purchase or refinance, it certainly would make a difference to a mortgage underwriter if you had a 30-day late. So I just like to be real clear that the consequences is really no different in the FICO score itself, but of course the penalty of purchasing and refinancing can be, of course, affected.
Okay. Now the difference between the payments. So for example, if someone, doesn't defer on their mortgage, but has the late on the credit card, is there such, aside of the negative payment that posts on the report, is there any wording specifically that the credit cards put on there during a time like this, or it's just simply, paid or didn't pay? 30 days?
It'll just be a 30-day late, unfortunately. There are companies, I know California Coast Credit Union sent out an email. I received it basically stating that, payments were going to be suspended on certain loans for 90 days. They weren't even going to take your money out. Okay. And that if you wanted to make a payment, you would have to go online to make the payment, which I did because I'm freaked out that they're going to do something funky to my credit. I'm like, listen, I didn't ask for this. Don't, force that on me and then have a consequence that I don't want. So again, all those things, now's the time to be asking a lot of questions, which I kind of goes against what I said earlier. I don't love the idea of asking questions regarding forbearance unless you need to do it just because of what we discussed. But credit card companies, by all means, reach out to them, find out if they'll, increase limits. Right now is a really, really good time to be asking for credit limit increases. It'll really bring those FICO score points up when your utilization ratios are low. So it's best to have never really charged more than 25 to 35% on any one credit card. That's really the sweet spot in the credit FICO world. So right now, if you're even able to get any company to offer a credit increase, that's a really good time to be doing that.
Okay. Sounds good. And now, as far as it pertaining to what's going on right now, what are the common things that you're currently seeing buyers do that is negatively impacting their credit rating? Let's say, for example, somebody who is trying to buy a house in the near future, or somebody who obviously was recently, like normal, everybody freaks out and then just starts, applying for a new credit card, or, what is the most common thing that you're seeing consumers do right now that could potentially have a negative effect in the months to come?
Well, a couple of things is everyone's buying online right now. People are literally overspending like crazy. I know I'm guilty of it right now. It's ridiculous. If I press submit one more time on Amazon,
Yeah.
we really need to be guarded, because although our spending needs to be, of course, cautionary right now, identity theft is on the rise like crazy. There are so many different links. People are getting text message links regarding unemployment money to be deposited, or bailout money, so to speak, coming, and please click this link and fill out this information. So right now, my number one thing I'm cautioning people is use the same credit card, the same one, so that if in case something's happening online, if you're going to be purchasing online, don't put every single one of your credit card information all over the internet for different purposes. If you can, just stick to one method of payment right now. It may make that particular bill a little bit higher than the others, but it will limit your exposed risk to the online spending and obviously the people that are taking advantage of consumers' credit information. So there's that. And then I've also seen, people making those decisions that, hey, listen, I'm going to be late on my credit cards because I don't know if I'm going to have money coming in. And at that point, certainly we can't. We get it. We're trying to help people, but I just want everyone out there to know the consequence is going to be a 60 to 80 day late, because 60 to 80 points, and it'll be a 30-day late. And a lot of people think that if they bring the account current, that the 30-day late goes away or their credit is increased. And that is not the case. Just because you bring an account current that was in a derogatory status, your scores are not positively impacted. It does not remove the 30-day late from your credit. So it's a serious decision, and if you have to do it, you have to do it. It's not going to be the end of the world, but just know kind of what you're getting before you make that choice.
Thank you. My next question, so with the new guidelines and everything that the Governor Newsom has mentioned in relation to tenants and the rent payments, how I know right now they have an extension to pay the payments, to offset a little bit of, the hurting that's currently going on with them not being able to make the payments to the landlord. Let's say, for example, a tenant who is looking to purchase a home maybe within the next 6 months to a year, by not making those payments to the landlord right now, given the guidelines, how will that impact them in the next months to come? If they were looking to either get a new rental or buy a new car, like you mentioned earlier, or, obviously be in preparation to be able to qualify to buy a home?
That's a really popular question. So when you're renting, it does not appear on your credit report. So there is that's part of the downside of having a rental scenario, is that you don't really get any credit, for renting. But what it can do is end up as a broken lease or an eviction. And so, of course, at that point, it could be an issue. So, of course, there's protection right now. And, of course, there's government protection for that to not happen in the next 90 days. The concern, though, is just like everything else. It could very well be that you are responsible for the entire thing in 4 months. So, and if that doesn't happen, then you're dealing with a potential collection account on your credit report that shows up because you have, rent that's in arrears, then they basically do report you. So basically, long story short, the only time anything's reported on your credit when it comes to renting is if it's negative. Okay. It doesn't build your report. So definitely be talking to your landlords, find out if they're going to report. Are they going to be able to help you break the missed payments, maybe break them into half for 1 month or whatever that looks like. Just make sure you're communicating with your landlord so that there's not upset landlords, because they have to pay the mortgage.
Right. So there would be a way for right now for those tenants to maybe not get affected, negatively in the next couple months, if that's sort of their plan, as long as they're in communication with their landlord.
Exactly. Right. Exactly.
not have an eviction or anything reporting directly to their
That's supposed to be the way it is. So that's when we always look at that CARES Act and say, okay, this is what it says, but then in real life, how is it going to shake out? So it is still super early, but that is supposed to be the way that the consumers are protected right now, for sure.
Okay. Now, I know we've seen a lot of increased FICO requirements with most lenders right now. What are the common issues that you're currently seeing consumers have, especially those that may have already gone through your program to repair their credit to now be able to buy? And although they may have seen a substantial increase on their credit due to the lender requirement changes, how has that impacted buyers?
So the FICO score slides really quickly from the lower FICO ranges into the mid sixes. And then it slows down from like 680 to 800. It creeps up ever so slowly. It's really hard to go from a 7 to an 800, for example.
Right.
But the FICO score guidelines going from, before I say BC, before Corona, generally speaking, lenders wanted to see you right around 640. It was a pretty popular FICO score, 640 to 680, depending on the lender, if they're a direct lender or banker, et cetera. But now we're seeing most people are saying, I got to get this client to 680. So what that means is a lot of people that were done and out of the program that canceled, that were, in application, are coming back when, oh, bummer, I need another 25, 30 points. So although it's frustration, it's not going to be a huge issue. We can certainly help clients bump up those FICO scores really, really stinking fast, especially right now with everything that's going on. I mean, everyone everywhere is on a quarantine, right? We're supposed to be working from home unless we're essential, which I think we're essential. but nonetheless, the credit bureaus too. So essentially what's happening, of course, is that when they're getting bombarded, and they are, with consumer credit disputes, they are just working their butts off to try to keep up with them. They only have the 30 days to respond. I will say so far they are being responsive, which is kind of a bummer because we were hoping that would slow down. But certainly it's important to just use the credit laws to your advantage right now, and go all in on disputing any negative items.
Okay. Now I know it may not be much. Most people are coming back to fix their credit. What would be a recommendation, for example, with everything going on? I know you said now is really the time to negotiate those accounts. Would the same thing go for those that may have already closed collections on their account? So let's say they've already had a credit card, but it closed out, but it still reports on there. How would you recommend consumers go about those type of accounts to possibly maybe negotiate the balances down to get them cleared off?
Yeah, so that's a huge perk right now. I would say absolutely, if you have open collections on your credit report, you absolutely should be taking advantage of contacting them and settling. They're taking the extremely low settlements right now. Some of the larger companies like NCO Financial, RJM, some of the major larger collection companies are settling anywhere from 25 to 50 cents on the dollar. Just keep in mind that paying off a collection will not bring your scores up, and quite frankly, it'll drop them initially, because it will reactivate the date of last activity on the credit profile. But it will long-term be the right thing to do, because once it's been settled, it doesn't resell, it doesn't re-age, which it's not supposed to do, but it does. So definitely now's the time to be settling those collections. I did have a friend, a personal friend, reach out to me, was it 2 days ago now, I think, and asked me, listen, is this the time to be negotiating on my credit cards? Not collections, but my credit cards. Should I be reaching out proactively and asking if they'll settle for less? And the answer is no. Okay. No. Because number one, that is a huge issue on your credit report. Number one, they're going to probably want you to be late first before they'll even entertain the idea. And of course, 3 to 6 months for the lates is going to be, horrific on your credit report. But nonetheless, settling open debt that you actually have active credit card debt is not what you want to do. You want to keep them open unless you absolutely have to.
Okay, and thank you for sharing that, because I know it might even be a common question that somebody might have. So in closed collections, would you recommend that after they settle those accounts that they maybe go through your program to get them removed? And if so, what is the successful rate that you've seen with having somebody call in, get them settled right now, especially taking advantage of the current situation? What is a success rate you have once they've settled? and now are trying to get deleted.
Once the consumer settles, then they come into our program. Those types of accounts have a 75 to 80% chance of removal. And the nice thing about that is it's permanent deletions. We're not doing temporary band-aids on things. If we were to dispute for deletion an open collection account, we could possibly get it removed. There's a percentage of likelihood of it. The problem is if we get it removed and it's not paid, the chances of them re-reporting it, and it's not the credit bureaus that re-report it, it's the actual creditor that still has you on the you owe me money list that reports it. So it's so much better to just settle them one at a time. By the way, you don't get more FICO score points by paying larger collections. So if you have the chance to settle 2 or 3 little guys, go for it. You're going to get a much bigger bang for the buck settling 3 little tiny collections than 1 large one. So the more, the better.
Definitely some good information. So our next question is right now, what are some tips consumers can be doing to keep their credit scores intact during this period of time? And in general, I know the concern right now is really, revolving around COVID-19, but I think in general, as, we strive to get back to our normal, daily routine, what are some of the tips that you could recommend for somebody that maybe in the future be looking to buy, maybe looking to sell? What are some of the things that they can do right now to make sure that, they're on top of their credit?
Okay, so I remember about half that question. I'm just kidding. I'm getting old. No. So first and foremost, I'm telling people you need to monitor your credit because of everything going on, and you're being told, no, this forbearance is not going to hit your report, and then it hits your report. And then we're being told it's not going to drop your scores. Well, then you see that other people are losing 38 points from just the words forbearance hitting their credit, and they never even got the forbearance. They just called to inquire. So first and foremost, now is not the time to be, lax on your credit. I would go right now to LifeLock or Identity Guard. There's no wrong one. You can pick any of them, but use one right now. Invest the $8 or sometimes $3 a month just to be alerted to the fact that your scores are going up or down, or there's new credit information being reported. That's first and foremost. And then, as I mentioned, as far as, be very, very careful what you're purchasing online. Use that same card, as I mentioned, and then focus on budgeting. Right now, the worst thing that can happen is we just go, crazy. We make these decisions based on emotion. And I always tell people your credit's going to be important. So don't just out of sight, out of mind it like people did back in 2010, when everything was going crazy with the real estate industry market. We can't afford that. We're going to be back to work. And so when everyone's back in operational again, it's going to be really important to run lean, get a family budget in place. I have some sample budgets through Excel that I email my clients. They can just erase some of the stuff that I use for my own family and add some in their own. But it's just super important to be able to say, okay, this is how much DirecTV should cost. And oh my gosh, we've been renting movies like crazy. Why is it $200 this month instead of, so really getting that spending in order and determining where the cuts are going to come from. A lot of my clients are asking, okay, listen, this is just the way it is. I have to be late on something. What do you recommend I'm going to be late on? And of course I hate answering that because I don't want everybody to quote me saying, oh, she told me to be late. But right now, call your insurance companies and ask them, I'm not driving. My car's literally sitting out front. Is there any way to decrease my coverages right now? Some of your utilities are not going to get shut off after 45 days or 60 days of not payment. You're going to owe it, but you're not going to get 30-day lates from not paying some of that right away. So things like that are, some things I've been giving them, giving tips on. But at the end of the day, I'd say monitor your credit, keep your spending down. We're all saving a lot of money not eating out right now. So that should be helping some people. So
one of the common things, and I'm sure you might have a response to this. So I know a lot of our clients, with their balances and everything, might feel like opening up a new credit card and either doing a balance transfer, to lower the debt on one card to put it on another because of the 0% interest. How would that negatively impact somebody, once the time comes and they haven't paid it? And initially, the purpose of doing that was really to save themselves money in the time being. How have you seen that impact?
Well, I guess that's really the problem, right? We get tempted by the interest, we open up another line of credit, which, by the way, if you have the discipline to do what you just suggested, slide it over to a card with lower interest, good. By all means, do that. It's super smart to do it. The downside is you're going to have an inquiry on your credit. So you will drop 5 points just from that. You're also going to drop probably 30 or 40 FICO score points by having a new credit card report on your credit profile that has no seasoning or history. So you're going to see a huge decrease in your FICO score, a very temporary decrease, but it will definitely hit. So it's important to know that, but it's not uncommon, and it's actually a pretty smart thing to do if you can stay away from using the card though, because most people will do it and then now they just get in debt on 2 cards instead of just the one that they had.
Right.
So it's really, are you accomplishing it? And then of course, if you do, like, what did I do one time that was a big disaster? Oh, I got a mattress. It was back in my early 20s. I think I was 20. Got a mattress, 0% interest. And then I forgot that it was due, or like all the interest would, come, kick in. Right. I think a lot of us have done that as kids. Yeah. But yeah, that's not fun either. So you got to be really careful that, a lot of people have care credit they'll do orthodontic work for their kids and just certain things that have amazing deals. But then after 6 months or a year, it's due. And so you got to be careful.
Okay. And I think that's obviously a main concern. I know a lot of people say, well, I'll just transfer my balance, which normally I personally myself, like you said, would recommend it if you have the discipline to be able to pay it off and not charge more than what you're transferring and making
totally.
Payment. Only because I feel like if they don't, now they have 2 cards and they got a little bit of a hit on their credit, but now they have 2 cards, and now to try to balance 2 payments if they didn't transfer their full balance doesn't necessarily help in the long run per se. Maybe in the short time frame of saving themselves on interest for a few months.
And honestly, yes. And the other thing we're seeing a lot of is well-intentioned family members. If you have a friend or family member that needs your help to buy a car, oh boy, because if they're late on that, it affects your credit. And so I can't tell you, I would say 1 in 4 of our consultations right now are, oh, that's because I helped my sister out, or oh, I was helping so-and-so out and they didn't make the payment. So ex-boyfriends and ex-girlfriends are notorious for that. So that's something to consider. And then what was I going to say? Oh, divorce. Obviously, unfortunately, divorce rates are going to be going up here pretty quick with everything being on lockdown. And just know that if you ever find yourself in that unfortunate situation where you're walked out of divorce and the court says, okay, wife is responsible for this card, husband, you're responsible for this card, that does not mean anything to your credit report. So if you were on the card originally together, if your significant other X decides not to pay, it will affect your score if you were on that report or if you were on the card. So be very careful. A lot of my clients are not aware of that. They think that the divorce documentation substantiates that they weren't responsible for the payment. And unfortunately, that is not the case. So again, got to monitor the credit because you'll never know what's going on unless you see it.
That is true. And it's good that you mentioned that, because I think, obviously with credit, there's so many different misconceptions that, we assume of different scenarios, and at least now we're getting clarification on that. So I think those were most of my questions. I think one of the other last questions I actually do have is, I know you touched on what they can do right now to continue improving their score, and in general. So what can somebody who is looking to purchase or looking to sell right now, or maybe not right now, but in the future, what are additional things can they do aside of, budgeting, aside of that? Obviously you recommend no co-signing.
Yeah. I mean, at the end of the day, it depends on really their situation, what they can do. There's, other than just saving money for the down payment, the other thing is if they don't know what their credit scores are, then they need to take a look at their credit to see what they're at, where they're at. If they're in the 500s and they know that, lending guidelines are requiring anywhere from 640 to 680 being most recent, with everything going on, I would say get in front of a credit expert, a good reputable, which I do big capital letters when I say reputable credit repair company. Make sure that you're getting a free consultation, that you're not paying upfront for credit repair services. That's illegal, especially in the state of California. And that you're not being, oversold. You need to have somebody that's going to sit down with you, do a thorough review of your credit report, talk about what types of items need to be removed, how they're going to be removed. They should be able to show you before and after credit reports of things that are very similar to what you have. But I would say now's the time to fix your credit. And other than that, there's really nothing else to do to prepare to buy a home. It's just make sure your credit's ready to go. Make sure you have that down payment, and don't be late on anything if you can help it.
Okay. Now thank you so much for sharing all that information. So for those who may be interested in getting started and have additional questions, how can they go about contacting you, and what would be the process to initiate consultation and start working on credit?
First thing is, depending on if you are a millennial and you don't like the phone, which most don't nowadays, you can go directly on our website, which is dcrusa.com for dedicated credit repair. So that's dcrusa.com. You click on the How It Works tab, and there's 3 steps right there for you. Click 1, will help you get a copy of the credit report. Step 2 will be to contact the office with your username and password for the credit report so we can log in and look at it. And then step 3 allows you to actually schedule a consultation. Normally, it's performed in our office or over the phone as an option. Right now, obviously, we're just doing phone consultations, but we do have all hours of the day, well into the evening, available for people who are able to work right now. But if you want to just call as well, you can do that too. No, you don't have to follow all those steps. You can just go right in and call our office, which is 951-246-7754.
Okay, well, thank you again, Tiffany, so much for your time and for answering all those questions. I think that it'll definitely, give a little bit of insight to a lot of our clients and, consumers out there who may be questioning or, shed a little light on everything that's going on. And hopefully this gives everybody a bit of hope that, there is a solution to being able to accomplish all of the goals that you guys have to buy a home, buy a car, get ahead of all of this. So I do thank you so much for your time.
Thank you for doing this. I think it's really good questions. People really need the answers to.
Again, thank you so much. And if any of you guys have any questions, I'll put the information down below so that you guys can go ahead and, be able to contact Tiffany and her team. Or if you have any real estate questions, you feel free to contact myself or any team members in the Amaya group. Thank you so much, Tiffany.
I appreciate you. Thank you.
Bye-bye.